Hey, good morning, everybody. Welcome to the Ankerstar Wealth Morning Briefing. We got three exciting topics for you today. First of all, I'm going to talk about long-term bonds. You're like, why would I talk about something so boring? Well, if you happen to check your portfolio once more than never, you will see that there's a position called VCLT, which is a Vanguard corporate long-term bond holding. So in case you're wondering why it's down today when everything else is up, we're going to talk about why that's in your portfolio and how it works and why we like the long-term bond thesis going into the next 18 months or so. Then we're going to switch to Mike, who's going to talk about something more exciting with Walmart earnings, who crushed it this morning. They're up big. They're carrying the whole market higher. You know, the good news, of that. And there's also some bad news about how maybe, consumer isn't so bad off after all. Mike will peel that back for you. But the last topic, which you want to stick around for, is a fun one, and the fact that, yes, you can put pets in your will. And there's a Wall Street Journal article that Mike's going to show you and talk about the highlights of today in case you're thinking about doing such a thing, or you're just curious as to how that plays out if you leave a pet in a will. So that's our show for today. It's a financial education presentation, so you have to do your own due diligence before acting upon anything you hear this morning. More disclaimer information is available at ankerstarwealth.com, and the opinions expressed are Mike and mine alone. All right, here we go on my sharing out of there it is, the CNBC screen. Now, Mike and I have a special screen that we can program with CNBC. That's our corporate screen. You can see this one here. If you look at the top end, VCLT is out there on the far right. So why would we have a bond holding there? Well, let's talk about that. So corporate long-term bonds, we're going to go to a full quote here, and we'll go to share this tab instead. So you should be seeing the Vanguard Long-Term Corporate Bond Index. Now, what you have there, this is a one-year chart, but that doesn't tell the whole story. Let's go to the 5-year chart. Okay, why are we in long-term bonds? Well, let's start with, risk-free rate, which is CDs and treasuries. Well, it started at the beginning of the year. We had, the highest I think I ever saw was a 5.7 CD, but we had 5.5 and higher for a long time. Now, if you go to buy a CD, I looked yesterday, I haven't looked this morning, the most you could get was a 4.7 on a 1 year. So rates, even though the Fed hasn't cut rates, the market is already starting to price in that cut, meaning the market driven rates, where basically everything but the 2-year is already starting to drop down. So with that, the risk-free rate drops. So if free money, CDs, treasuries, is starting to not be as attractive, what is attractive? And that's the shift to investment grade. So a lot of folks out there are in retirement phase. We talk about income generation here every day for folks that are out there, and the being able to generate that 5+%. Well, if you can do it with CDs, great. If you can't, then you either have to get into heavy dividend paying stocks, or investment grade bonds, or some real estate investment trust, or some private equity. There's other options out there, but the easiest one is just the shift to bonds. So what do Mike and I forecast, as well as the rest of the team, is rate cuts, right? Starting in September, I think there'll at least be a 25 basis point rate cut now, maybe 50, probably not after today, but anyhow, we'll see where the market is then. But a 25 basis point cut, but that whatever we get is going to be the leading edge of what we believe to be a handful, at least, of cuts, taking us from over 5% now on the 2-year down to 4 on the short-term rate, or so. We'll see. But if I want you to look at this chart, so going into 2022 January, which is right here, which is when we started rate hike-a-palooza, where we had all those rate hikes during the entire year. Look what happened to this fund. We expect the inverse to happen, and it really is. It started to uptick now in anticipation, but we really think VCLT it's not going to scream higher. It's just not that kind of holding, but it should melt higher, if you will, as rates actually are announced that the cuts are happening. So that's the anticipation. It is a long-term corporate bond index. So if you want to dig into what's in there, you can click on it and see their top holdings and all that stuff. Most people don't. We have all the confidence in the world in Vanguard of what they're putting together as a product. So that's why we own it. All right, I'm going to stop sharing and hand it off to Mike. And Mike, take us away with what's going on in the market and Walmart earnings this morning.
Absolutely. We have green across the board, except for, of course, the VIX is down, which is good. So why is it going up? The biggest driver today is Walmart earnings. And when we talk about Walmart earnings, Walmart to me is one of the companies that absolutely has their hand on the pulse of the consumer. If Walmart spending is up, then the consumer's at least spending. I'm not saying they're doing well, but they're at least spending. If Walmart goes down, Walmart, McDonald's, Starbucks are three right off the top of my head that are on the fingers on the pulse of the consumer. One thing I did want to show is just kind of, this is the 1 month graph of the NASDAQ, and you can see with today's jump up, it's kind of like, oh, there was a dip last Monday, and oh, we're already past that. So for those of you, and I actually met with a client yesterday, and they were like, yeah, I didn't even realize there was a dip. Great. That's you're sleeping well, not realizing there's drops and that. So, and it's already just a blip in the past. Will the market go up and down going forward? Absolutely. So we can count on that. But today, the big news, Walmart says this article, they're up right now up 6.5%. And for a company as big as Walmart to be up 6.5%, that's saying something.
Yeah.
This article says, gives insight into the health of the consumers and the economy. And what they did is they beat on sales, they beat on earnings, and they raised their projections for the year. So they're saying this year we're doing better than we thought, and we're projecting we're going to do better. Next year, they lowered it just a little bit below the analyst expectations, but obviously not enough to concern anyone. So great news on Walmart. Steve mentioned the interest rate cut, and I had this article pulled up because the market prices in these cuts, and this article is from yesterday, and Walmart saying the consumer's doing good will lower the chances of a 50 basis point or 0.5% cut. But as of yesterday, there was a 60% chance they were cutting it by a quarter point and a 40% by a half a point. So, the market's pricing it in, just like Steve said with the Vanguard bonds. So we'll continue to see how this monitors out. And then the last thing, which, hey, I got to show this picture. Like, you see the nice family with the two kids, and the one little baby's looking at the dog, and he's like, "You're taking my inheritance." That's what we're talking about.
I see that. Yeah.
He's staring at that dog or the ball or something. He's like, "You're writing the dog into the will?" Yes. There's an article today, putting your pets in your will is no longer just for eccentric billionaires. And the biggest example of it's quoted in this article was Leona Helmsley, who passed away a while back, had $12 million for her Maltese named Trouble. So just imagine this dog has been left $12 million. I don't know exactly what that means or what the dog did. It did create fights within her own family, and they got it lowered from 12 million down to just 2 million. The dog had to really kind of skimp down a little bit. But here's the article is people are starting to put their pets in as part of their estate. And what you would need to do is obviously have this listed out, and you have someone that's going to take care of your animal. Now, if you're talking a small dog that can live 20 years, I think it's one thing, as opposed to a parakeet who might live, I don't know, a couple of years. But you could build this out. And, in this article, it's saying it's getting more and more common. Now, just kind of skim part of the article for you, it's called a pet directive. Now, animals don't have rights the same as kids or children or beneficiaries. That's probably a good thing. So you have to make sure that whoever you give this to, like, so let's just say, I love my dog and I want to, if I pass away, Steve's going to take care of my dog, and I'm going to give Steve, 10 grand a year to take care of my dog. There's nothing in it that says Steve can't take it to the pound the next week and say, "Thank you for the money." So you better make sure it's someone that you can trust. There's no protection like there is for kids or beneficiaries. So, and it does say that more than 40% of cat and dog owners have named a caretaker in their wills. So that is the key part of it if you're going to do it, is to make sure you pick that caretaker well. So I thought it was interesting. I don't have a pet, and when I've had pets, I mean, I liked them a lot. I loved them, but I never thought about adding them to my will. I haven't passed away, so they did all right. But Steve, I don't know. I know you have a couple dogs. You have a couple kids. I don't know if you want to break it out 25% each. It's your decision. Turn it back over.
Yeah, there's certainly some moral challenges there on what you're going to do. But I will say, stepping away from it, when I think of putting stuff in your will, and you're like, so if you heard Mike say the term or the comment, the eccentric billionaire left 12 million, but they were able to get it down to 2 million. So that's one thing that, as I'm getting a little bit smarter, I'm not a lawyer, so I'm not, speaking complete facts here. I do have a lawyer on the will side and have a lawyer on the trust side for you to talk to if you want to talk specifics. But with a will can turn around and be challenged almost immediately in court. So during that 1 to 2 year period, while assets pass through probate and they try to figure out the will, you can challenge things. Where I think a trust pretty much is immutable in the fact that whatever you set forth is, because it's an entity at that point. So there's far less of your children challenging why Fido is getting 12 million. So I don't know. We'd have to see. Again, I've got a team of legal experts that I work with that can help you dope that out. But it's kind of interesting. Where I was antitrust for a long time, I now am starting to see the light, right? We all learn and grow over time. So I can kind of see exactly what a trust for you that a will doesn't. So if you're going to do something crazy, not crazy, if you're going to do something out of the normal, I should say, trust might be the better way to go. You'd certainly want to talk to somebody before you make that decision. So fun topics today. Thanks to Mike, as always, for bringing in far more interesting stuff than I have for you on a daily basis. And with that, I hope you have a happy Thursday, and we will see you guys back tomorrow. Have a good one.